Bitcoin is not only under price pressure right now, it is under attention pressure. For most of this cycle, Bitcoin has been one of the strongest stories in the market. ETF demand, institutional adoption, scarcity, inflation concerns, and the long-term idea of digital money all helped make Bitcoin a serious macro asset. But markets do not move only because an asset has a strong long-term thesis. Markets move when liquidity, attention, confidence, and narrative all concentrate in the same place at the same time. And right now, a large part of that concentration is not sitting in Bitcoin. It is moving toward artificial intelligence. This is the real tension behind the current market. Bitcoin may still be important, and it may still have a strong place in many long-term portfolios, but in the short term, the market is asking a different question. Where is the strongest growth story today? For many investors, that answer is not crypto. It is AI, semiconductors, data centers, cloud infrastructure, energy demand, and the companies that appear to be building the next layer of the economy. That does not mean Bitcoin is dead, and it does not mean AI will rise forever. It simply means the market is rotating its focus, and Bitcoin is no longer the only major story competing for risk capital. When people say Bitcoin looks weak, they often focus only on the chart. They look at support, resistance, moving averages, volume, and recent price levels. Those things matter, but the chart is only the visible surface. Underneath the chart, there is a deeper competition taking place. There is a competition for liquidity, a competition for attention, and a competition for belief. Bitcoin's problem is not only that price is struggling. Bitcoin's problem is that the market currently has another story that feels more urgent, more visible, and more connected to corporate earnings. Artificial intelligence is no longer just a technology theme. It has become a capital allocation theme. Every major investor is trying to understand who benefits from the AI infrastructure build-out. Which chip companies gain the most demand? Which cloud platforms become more powerful? Which data centers expand? Which energy systems are needed? Which companies can convert AI excitement into real revenue, margins, and long-term market power? This gives investors something concrete to buy and something easy to explain. AI is not just a dream in the market's imagination. It is attached to companies, earnings reports, capital expenditure, supply chains, and future productivity. Bitcoin's narrative works differently. Bitcoin is not a company. It does not report quarterly earnings, sign data center contracts, sell AI chips, or announce cloud revenue. Its value comes from scarcity, network belief, macro liquidity, institutional demand, and the willingness of investors to treat it as a major monetary asset. That can be extremely powerful in the right environment, but when liquidity becomes selective, Bitcoin needs a clear reason for capital to return. Without that catalyst, price can feel heavy even when the long-term thesis remains alive. This is why the current market feels uncomfortable for Bitcoin holders. Risk appetite has not completely disappeared. Investors are not hiding only in cash. But when they choose risk, many of them are choosing the part of the market with the strongest momentum and the strongest story. Right now, that story is AI. So the important question is not simply whether Bitcoin can bounce for a few days. The better question is, what would make capital rotate back into Bitcoin with conviction? There are a few possible answers. First, Bitcoin needs evidence of renewed demand. That could come from stronger ETF inflows, stronger spot buying, or clearer accumulation from larger market participants. When Bitcoin rises only on weak volume or short-term speculation, the move can fade quickly. But when demand becomes visible and persistent, the market starts to believe again. Second, Bitcoin needs macro conditions that support liquidity. If interest rates, bond yields, the dollar or risk sentiment are creating pressure, Bitcoin can struggle even if its long-term story has not changed. Bitcoin often performs best when investors believe liquidity is improving, real yields are less threatening, and risk assets have room to breathe. Third, and maybe most importantly, Bitcoin needs to regain attention. This may sound simple, but in markets, attention is a form of liquidity. When investors are watching an asset, talking about it, researching it, and positioning around it, price can move faster because the market is emotionally and financially engaged. When attention moves somewhere else, price can feel slow and heavy even without a dramatic collapse. That is why the phrase "AI runs, Bitcoin waits" captures this moment so well. AI is not only moving in price, AI is moving inside the imagination of investors. It gives the market a story of growth, infrastructure, productivity, and corporate power. Bitcoin, by contrast, is waiting for proof that its own liquidity cycle is still alive. But there is another side to this story. When too much capital crowds into one theme, the market eventually starts asking whether expectations have become too high. This does not mean AI must collapse, and it does not mean the AI story is fake. It simply means that every powerful market narrative eventually faces valuation pressure, positioning pressure, and disappointment risk. If AI becomes too crowded, some investors may begin looking for the next area that is under-owned, under-loved, or simply lagging behind. If Bitcoin stabilizes at the same time, and if ETF demand or macro liquidity improves, Bitcoin could become attractive again, not because AI failed, but because capital rotation never stops. Markets are not static. They move from one story to another. They move from fear to greed, from safety to risk, from one asset class to another asset class. Sometimes Bitcoin leads, sometimes technology leads, sometimes gold leads, sometimes cash becomes the most attractive position. The key is not to become emotionally attached to one narrative. The key is to understand where liquidity is moving and why. For the calm metrics, this is the main framework. Bitcoin is not just a price chart. Bitcoin is part of a larger market system that includes liquidity, macro conditions, risk appetite, investor psychology, and competing narratives. If Bitcoin is weak while AI is strong, the answer is not to panic. The answer is to ask what the market is rewarding right now and what Bitcoin would need in order to compete again. This is also why price alone can be misleading. A small bounce does not automatically mean strength has returned, and a sharp drop does not automatically mean the long-term thesis is broken. The better signal is whether Bitcoin can attract real demand again, hold important zones with stronger participation, and rebuild a narrative that can compete with the strongest parts of the market. Right now, AI has the market's attention. Bitcoin is still important, but it is no longer the only major story in risk assets. That is the difference. Bitcoin is waiting for liquidity, but more importantly, Bitcoin is waiting for attention to return. Until that happens, the market may continue to treat Bitcoin less like the leader of risk appetite and more like an asset that still needs confirmation. So the real takeaway is simple. Do not only ask whether Bitcoin is up or down today. Ask whether capital is rotating toward Bitcoin or away from it. Ask whether investors are building conviction or simply waiting. Ask whether the next major market story belongs to crypto, AI, or something else entirely. Because in this market, the asset with the best chart does not always move first. The asset with the strongest combination of liquidity, narrative, and attention usually moves first. And right now, Bitcoin's biggest challenge may not be price. It may be attention. This is not financial advice. It is a market framework for understanding liquidity, risk, and investor behavior with a calmer lens.